So, two business headlines for us this morning, both focusing on the economy. Abu Dhabi economy growing just over 3%. Also, those latest numbers from the UAE Central Bank forecasting the country's GDP to grow by 4 and a bit percent as well this year. So what you really need is you need an expert to come and explain what is going on with the economy, not just here in the UAE, but the region as a whole. And as if by magic, we've got one. Because despite a few challenges out there, we know the oil cuts are weighing a little bit. Geopolitical turbulence certainly weighing a lot on the region at the moment. But we have just got the latest results from the PwC Middle East Economy Watch. It's released today, in fact, and we'll tell you shortly how you can get your hands on it. To talk through what's going on with the regional economy, I'm joined by partner, Middle East strategy leader at PwC Middle East, Stephen Anderson, back in the studio with us. Stephen, always good to see you. Thanks for joining us.
Yeah, morning, Tom.
So I always look at these reports, and I suppose it's just because I'm naturally lazy. And I look throughout the reports and I go, is there one word to sum it up? And I've got a couple of R's, and correct me if I'm wrong. Resilient and robust. Would that be fair?
Perfect. You summed it up pretty much perfectly, Tom. My job's done, I think. You're absolutely right.
Let's talk cycling.
That's easy. Robust is definitely the right word for it. I guess at the highest level, and it's nice that we agreed with the central bank. So we said UAE will grow this year around 4%. It's about 3.7% across the region, and 4% in Saudi Arabia.
One of the reasons we've talked there about the oil cuts, and that's something that you've focused on. We know that OPEC Plus have confirmed their production cuts moving forward as well. The age-old adage is that if oil is high, then things are good here in the region as well. How's that going to weigh on the economy as a whole?
So it's pretty uncertain in terms of oil demand globally. So there's a bit of a difference between what OPEC are saying and what the International Energy Agency are saying in terms of what we think the future demand would be. Oil cuts have been extended through Q2. Possibility it could be extended further into the year. I guess that adds a bit of uncertainty. So the UAE is currently producing about a third below capacity, and Saudi's producing about a quarter below capacity. Now that's weighing on their economy. So oil has just gone up, as Brandy just said, off the back of what's happened in Damascus. But with oil price at around about $80, which is where it's been trading, then that will actually be a deficit in Saudi Arabia this year, given the investments that are happening. So that will weigh on the economy there. From a UAE perspective, we're in probably stronger shape. There's a surplus, and you certainly see that in Oman as well.
How often do we sit here and we talk about, the energy prices, the oil prices, gas prices, etc., which of course contribute to the economies here. But as we've seen in recent years, there's been no shortage of initiatives by the governments to invest into the non-oil sector. I don't want to say it's starting to pay dividends because it's been paying dividends for many, many years, but certainly that area is growing, isn't it?
No, it's racing ahead. It's certainly racing ahead. So the big transformation themes continue. I think I say this every time I come in. The region's digitising, decarbonising, localising, privatising and modernising, and that's paying dividends. We're going to see very strong non-oil growth. We're predicting sort of 3.9% to 4% next year. PMI data is very strong as well. We're way above the 50 mark, which is this kind of break even, if you like, for confidence, both in the UAE and Saudi, slightly off in Qatar and in Kuwait. And then I guess the other big news in the region, we've kind of tamed inflation. Sometimes doesn't feel like it when you're out spending your dirhams, but certainly we've seen transport costs coming down. We are seeing rents ticking up. But generally speaking, inflation is hovering around the 2% mark. And again, that gives us increasing confidence as we look forward.
Another thing that's lingering is, of course, disruption in the Red Sea at the moment. We've had no shortage of logistical, maritime and other experts in talking about the impact that's having on global trade, not just trade here in the region. How's that weighing on the economies across the region?
So globally, about 15% of global trade, about $1 trillion passes through the Red Sea every year, and obviously that's now being diverted around Africa, adding a couple of weeks at least to how long it takes trade to move around and into the region. So that's obviously going to weigh on costs for the region. What we're also seeing is a little bit more discussion around what are the alternatives. So there's a couple of alternative trade routes that have been discussed. There's one launched at the G20 last year, the India, Middle East, Europe Economic Corridor, which would basically be a rail connection up through Saudi Arabia, then across into Europe, and also the Iraq Development Road, which would take trade, I guess, up the top of the Gulf, just getting my geography going right in my brain, up through Basra, up the Euphrates, and up into Europe that way. So both of those are being looked at. Frankly, we'll need a resolution to obviously the things that are happening, the tragic events that are happening in Gaza. I think would need to be resolved before we see real movement in that regard.
One thing that remains a stalwart at the moment, and I know that how many times have you and I and all the team here spoken about sustainability, and again, it's good to see that we're still talking about sustainability. It is a fixture now in any companies and any industries, plans moving forward. But how's that sort of weighing on economies at the moment, especially when it comes to things like financing?
So I think a bit like the non-oil economy, this is a booming area in green finance. I think in particular what's coming off COP28 and the UAE consensus, there's the big announcement of the $30 billion Altera fund, which would crowd in $250 billion of financing. And we're seeing that now manifesting in the region. So green financing last year in terms of green bonds and sukuks was doubled, so it was about $24 billion of issuance. We saw people like Commercial Bank, Al Rajhi, ENBD, you saw SEC, you saw some of the sovereigns, so PIF and Mubadala, all issuing last year. We saw the amazing close of the NEOM $8 billion green hydrogen plant, so that was a bit of a landmark. We're seeing similar things in Oman. And then the green finance, if you like, the frameworks are now being established. There's probably a little bit more work to do. We think there's around about $168 billion that needs to be unlocked to fund the green transition here in the UAE. And there's also quite a lot of talk out there from the Saudis that there may be a sovereign issuance of green bonds following up the amazing stuff that PIF have done in that regard.
And I always weigh on you as our sort of regional correspondent. I think you and your team do the most air miles than anyone here in the region as well. So therefore have a good finger on the pulse of different economies around. I mean, is that sort of feeding into foreign investment at the moment? We know there's population growth here, but are we seeing an increase in foreign investment in this region?
We are. We've certainly seen a lot more interest. I think particularly if you look at, I would just take one example would be the IPO market. I mean, this is the centre of the world from an IPO perspective. It's a complete outlier in terms of the pace we've seen there. And that's certainly attracting a lot of interested foreign capital. I think we're also starting to see as projects move beyond strategy into implementation, then there is a need more to crowd in more foreign investment into many of the larger, say, giga projects in Saudi and many of the projects here.
The Middle East Economy Watch from PwC is out at the moment. How do people get their hands on it? How do they find out the latest?
You can follow me on LinkedIn. Click on that. That's an easy one. That's a cheap LinkedIn.
Get the followers, mate. That's what it's all about.
Get the followers up. Or you can find it on our website. It's probably the easiest way.
We've got 30 seconds. I'm going to use every 30 of them if I can. Just in a word or two, do you expect to see that resilience, that robustness to continue throughout the year?
I do. I think we'll continue to see that robustness kicking in. I think we are seeing some pressure on budgets. So what I'd expect to see is, yes, we'll continue to grow, but there'll probably be a little bit more in terms of prioritization, optimization, and a real focus on ensuring we're delivering value.
Good on you, Stephen. Good to see you as always. Thanks so much indeed for joining us. Stephen Anderson, partner, Middle East Strategy Leader, PwC Middle East.
By 103.8.
Join the conversation.